Hi, this is Takashi Shida from METI in Japan. Hopefully you can hear me.
Yes, but if you could just speak a bit loudly, it would be better.
Okay, so hopefully that's a little bit better. And thank you to Juyong and to Tiffany for the invitation to speak today. I know that I have only about 10 minutes for the presentation, and it is getting a little bit late in Tokyo, so I'll jump right into the presentation. And today I'll be introducing what we've been doing in Japan in terms of green investment support measures. So next slide, please. So it's a fairly brief presentation, but I want to cover four main points. At the top, just a very brief mention of where Japan is in terms of emissions reductions. And then more substantively, to cover the points relevant to the session that we're having today. So explanation of governance and accountability of our green investment support measures, and an explanation of how we've selected the sectors that are eligible for the reinvestment support, as well as how that fits into the overall strategy to reduce emissions. So I hope actually listening to the previous presentations, I think there's quite a lot of overlap. So hopefully this will be useful for you all. So next slide, please. Yeah, so just again at the top, so this shows Japan's emissions reduction goals. For 2030, we're aiming at 46% below 2013 levels. And right now, so the latest data we have is up to 2022. And so far, the reductions are coming just about where we would want them to be based on a very simple linear reduction. So we're basically halfway from 2013 to 2030, and we're in terms of the timing, so 9 years from 2013, and we're basically halfway to the emissions reduction. So just about 23% reduction from 2013. So I think we can say that we're making good progress so far, but obviously the further down the road we go, the more difficult it gets. So what the extra incentives that we are putting in place aims exactly at reducing the emissions from those harder to abate sectors. So next slide, please. So I want to spend a little bit of time on this slide, which explains the governance structure for our green investment support measures. And I should be clear that so obviously there are a lot of different types of support measures for the green transition. And some of those measures, there might be fairly small specific measures that are included in our annual budget. And they wouldn't be necessarily be subject to a specific law. But because some of these support measures that we're providing, they're quite large scale and they span many years. So instead of just being reflected in annual financial budgets, they're actually underpinned by legislation and specific government action. So to be a little bit more specific, we had last year what we call the Green Transformation Promotion Act, which is a piece of legislation, which actually does a lot of things. But one of the things it does is it provides the basis for providing financial support to reduce carbon emissions, basically because it gives authority to the government to issue a green transition bond, green transformation bond, sorry, that the government can then use the proceeds to fund these decarbonization efforts. And that legislation is then becomes more specific through cabinet decisions, which spell out the green transformation promotion strategy, and more sector-specific investment strategies, which we announced in December last year, which goes down into a little bit more specific details at the sector level, outlining which sectors we're going to cover and also what kinds of actions we're going to promote within those sectors. So that also, so the green transformation promotion strategy is the overall strategy, and that's a cabinet decision. Whereas sector-specific investment strategies, it's not a cabinet decision per se, but it is a report basically submitted to cabinet level meetings within the Japanese government. And then below that, we also have firm level commitments. So because we're providing long-term support to private companies, we want to make sure that their efforts are in line with what the government's climate mitigation strategy envisions. So, so some of the larger scale R&D or investment supports, the companies that actually win the support will be subject to annual reviews, and that will consist of two basic elements. One is that obviously the actions that the companies take must lead to actual emissions reductions. And secondly, because the whole strategy is based on attracting green investments, it must also contribute to industrial competitiveness. And because there's an annual follow-up review with participation by company management, there's a kind of built-in mechanism to make sure that the companies are actually following through on their commitments. So next slide, please. This slide is a little bit busy, but basically we're trying to show here what are the criteria that we use to pick the sectors that will be eligible for green investment promotion. And so we've listed 4 up front on the top half of the page. At the basic level, obviously, because this is providing government support, it has to be directed in cases where private companies acting alone wouldn't make the investment decision. So the support is there to basically help companies make that decision. If that investment is going to come forward anyway, then the government doesn't have a rationale for providing that support. The second part is that it has to contribute to the dual goals of the green investment promotion strategy, which is both economic growth and competitiveness and emissions reduction. So as I think some of the presentations previously referred to, this dual goal here. So we want to see a great investment in competitiveness, but at the same time that also has to lead to emissions reductions. And thirdly, and also I think this is something that was previously touched upon, so the support will form part of a package alongside regulations and other policy measures. So the support will help companies move in a certain direction, but they won't be the only thing pushing them in that direction. And I'll touch a little bit more on that at the end as well. And finally, as I said, the whole strategy has to contribute to increased domestic investment. And the projects that, for instance, simply buy emission certificates from abroad won't qualify for these investment support measures. So next slide, please. So in terms of which sectors we want to cover through these strategies, obviously we want to cover the sectors that produce a lot of emissions. And so there are a few that stand out. If you first look on the left-hand pie chart, so something like 40% of Japan's CO2 emissions come from the energy conversion sector, basically from generating power and so forth. So that's obviously one major target for our investment support. Next, looking on the right hand of the right-hand pie chart, which shows the distribution after we've allocated the emissions from electricity and heat. A big part is the industrial sector, which is the subject of the topic today. So you can see individual sectors like steel and chemical obviously emit a lot of emissions. So they would be prime targets for this investment support. And also in the kind of orange part, we also have things like buildings and transportation services and heating and cooling and so on and so forth. So those are some of the major sectors that we're targeting, based among other considerations on the scale of their emissions and the share of their emissions in terms of the total from a national perspective. Next slide, please. So based on the considerations that I just outlined, so we've picked up from the sector-specific investment strategies a total of 16 sectors that are eligible for support through our scheme. So some that's already been mentioned, like steel and chemicals. Some basically consumer-facing subsidies, such as for cars, clean energy vehicles, and the like. Some sectors that are essential for producing a lot of these things and producing clean energy. So these would be things like batteries, renewable energy and nuclear power, obviously, and also semiconductors, hydrogen. And in the middle, we have a phrase, life-related green transformation, which may not translate very well, but what we're trying to get at is things like building, heating and cooling, light and illumination, and things like that, which are more closely related to commercial activities or to the residential sector, but taken together, they're also very large emitters, so they also are eligible for support as well. Next slide, please. So as I said previously, the support that we're providing through our investment support is one part of a greater package, and the chart in the bottom half of the page tries to visualize that a little bit. So first, in the upper left rectangle, there's the initial investment support. So basically for things that requires a lot of upfront investments in clean technology, there will be a support provided to try and bring down some of the initial investment costs. And below that box, there are also measures at the production stage for things like, for instance, green hydrogen, which will, for the foreseeable future, it will cost a lot more to produce clean hydrogen than hydrogen from fossil fuels. So there will also be incentives at the production stage for things like green hydrogen to give basically incentives for companies, not just at the initial investment level, but also when they actually operate those investments and keep producing the cleaner goods that will reduce emissions. And also, in addition to that, we will have gradual carbon pricing increases. So we already have some fairly basic level of carbon pricing within Japan, but we've already announced that we will be pushing that up, both through kind of carbon tax or carbon charge scheme, and also through an emission trading scheme. So the further out we go, the the higher levels of carbon price will be applied, which will also provide incentives for companies to switch from more emissions intensive to less emissions intensive products. And finally, not easy to visualize, but at the same time as all these carbon pricing positive and negative tools, we will obviously also have a whole host of regulatory measures which will complement the whole package, so that we will have regulations, taxes, emissions trading schemes, and subsidies, all kind of trying to move companies further down the road to carbon neutrality. So I think that's the last slide for me. Yeah, so happy to continue the conversation and answer any questions. Thank you.
Thank you, Takaki, for your valuable presentation.